Stories right now, just before 6 a.m. on the East Coast. We are looking at another tough day for markets. Stocks in sell-off mode right now. We're getting unexpected economic data out of China overnight, as well as Europe this morning, weighing on investors. The Dow Jones Industrial Average right now down 225 points. That is down 1% on the Dow, 1% on the S&P, and better than 1% lower on the NASDAQ, down 73 points on the NASDAQ right now. And the markets yesterday, well, they were a little closed, actually, at the close. The declines we're seeing now put the Dow and the S&P 500 on track to erase the gain for the week. Yesterday, the Dow was up 70 points. The S&P was down a fraction, and the NASDAQ was down about 28 points at the close yesterday. Let's check the markets in Europe this morning on the heels of this sell-off going on Wall Street. The European indices are down across the board. FT 100 down 56 points, almost 1%. CAC 40 in Paris down 41 points, also almost 1% lower. And the DAX index down about 1%, 102 points lower on the DAX index this morning. In Asia overnight, declines across the board. The Nikkei average, the worst performer, down better than 2% on the session overnight. Well, we're taking a look at China, talking tough on China. President Trump touting his trade success in a new interview with Fox News' Harris Faulkner yesterday. Watch.
I have great respect for President Xi. He's not a capitulator, but I will tell you this. China's economy, if it's in trouble, it's only in trouble because of me.
Plus, issuing a new threat to General Motors, President Trump slamming the automaker again after its layoff announcement. The stock is at $35.11 a share. As you can see, that chart has been lowering over the last 6 months. We've got the fallout coming up. Caffeine on demand. Starbucks expanding its delivery program across the country. What to expect when making your next order. And a view that is out of this world. Virgin Galactic's test flight reaches space. We have more of this unbelievable image later this hour coming up. All those stories coming up this Friday morning. And joining me to break it all down, Fox Business Network's Dagan McDowell, Third Seven Advisors market strategist Michael Block, and Meslansky and Partners president Lee Carter here once again this morning. Good to see you.
Great to be here.
Welcome. Good to see you.
Morning. Another interesting day in the markets.
Yeah. What's going on this morning from your standpoint, Michael?
Well, look, you have this Chinese data overnight. Retail sales in China making a 15-year low. Industrial production, 2.5-year low. And in Europe, you have France, according to the flash manufacturing PMI there, they're back into contraction there. We've seen some of the protests over there, and well, it's starting to manifest itself. Europe, China not showing the growth that we have here, and here we are looking for a trade deal. So there's a lot of growth slowdown happening
over
globally.
the years. We used to debate whether or not there's a coupling, a decoupling in terms of the global economy. I don't think that it's anybody's guess that, yeah, we are going to see weakness in Europe and Asia. It's going to hit the U.S. There's no decoupling going on.
Right. That's kind of one of the major of three things weighing on the market. That's one of the themes that the weakness overseas pulls the U.S. down, if not into recession. Very slow growth in the next year, number one. Number two, what the Federal Reserve is doing to not just the economy, but to the markets in terms of the removing money from the financial system and the liquidity problems and volatility it creates there. And then number three, it is the trade deals. And do these headlines matter? Does the tough talk matter? Ultimately, at some point, the markets are going to need to have the administration put up and, well, stop talking.
Yeah, well,
I was gonna say something.
right. We're going to see how this impacts things, but the uncertainty of it in terms of what these tariffs mean for input costs and profit margins is questionable, and that's what's weighing on this market as well as interest rates. We've got a Fed meeting next week. We are expecting the rates to go higher again. Joining the conversation this morning is Tennessee Congressman and House Committee on Appropriations member Chuck Fleischman with us this morning. The CEO of Citizens Financial Group is back with us. Bruce Van Saun is here. BlackRock Global CIO of Fixed Income, Rick Reeder, is here to walk us through what's happening in terms of interest rates. And NCO founder and CEO Vanessa Ogle is here as well. We've got a big 3 hours. Don't miss a moment of it. Our top story, of course, this hour is breaking news. And then China is halting punitive tariffs on U.S. autos, car parts starting January 1st. This as trade tensions are hanging over the economy. China is going to be stopping these punitive tariffs on U.S. cars and auto parts beginning January 1. This is just happening. The Wall Street Journal also conducted a survey finding that 47.3% of economists view on the U.S.-China trade dispute as the top economic threat for 2019. President Trump sounding off on the trade tensions in an interview with Fox News' Harris Faulkner yesterday on Outnumbered Overtime. Watch.
I've established a fantastic relationship with President Xi, who's the head of China, the absolute head of China. And I think we're going to work a fantastic deal for both countries, but a fantastic deal for us. We're going to get China to open up. We have placed tremendous tariffs on China, that when China sends things into America now, they're paying 25% interest on everything they send in. And we've only gone to a certain tranche, $250 billion. It's 25 on the first 50 billion, and then it's 10 on the rest, but it goes to 25 on January 1st. But I released them of that temporarily until the end of the 90 days to see whether or not we could make a deal. But just one thing. After that, I have an additional $267 billion worth of taxes, essentially, to put on China. And they don't want that. That would be devastating for China.
Well, this is a big fight between the U.S. and China. It is more than just trade. But now we see this news this morning, Michael. China halting punitive tariffs on cars, on U.S. cars, auto parts. Your reaction to the president's comments and these developments coming out of China this morning?
There's some positive developments. The tariffs are going lower. We've seen U.S. soybeans flowing back into China. We've seen those agreements made. The problem is the messaging's off here. This doesn't have to be a fight here. You know, they're making progress, and everyone wants the same thing. We want the best deal possible from the American vantage point, but we also, China wants to invest in the United States. China wants free trade. The data that we cited at the top of the show was just terrible overnight. They need to do something there. They have a credit mess. They have an emerging middle class. Xi has a lot of constituents here. Look, and President Trump is going to engage in some brinksmanship here, and I understand that. There's a method to the madness. But there needs to be this focus on positivity. Markets will like that. Yeah. Economic confidence will grow if the message is positive. And, earlier this week...
What's positive about China stealing IP from us for decades?
Oh, I'm not saying...
What's positive about China not opening up its markets? These are serious issues.
No, those are serious issues. But, A, they want to open up the markets, and B, we could stay positive but say we're also not going to roll over and let IP theft happen. These are all factors that go into the whole equation. But it doesn't have to be confrontational. It's more matter of fact of like, you're going to shut down this IP theft. This is how we're going to enforce it, and this is part of the deal.
Well, I just want to point out really quickly. You said it doesn't have to be confrontational, but you're talking about a president of the United States who is confrontational. That's in his nature.
That's fine.
And so, I just always focus on people get so upset about the messaging. No offense, Mike Block, with all due respect, but the president's going to message the way that he messages.
Right.
Lee.
And I was going to talk about, I was going to talk about the two. This president is a confrontational messenger, especially on trade. He loves to talk tough, and he is going to fight. The thing that I find fascinating is this isn't a different model than we've seen in any of the other trade deals that he has made. And so the fact that people are so nervous about this one is fascinating to me because he has made deals using the same model, and I think he's confident using this same model. I know China's very different. But I'm curious what it's going to take for the markets to feel less anxiety, because people trusted that he was going to get these other deals done. They're not necessarily trusting that he's going to get this deal done. I want to know what's so different this time.
I think you need to see concrete changes out of Beijing. And, you're all saying how confrontational he is with China. Good. I'm glad he's confrontational with China. I mean, this is a different situation than the steel and aluminum tariffs across the world against our friends. But with China, they have been a bad actor. And this is not just an economic story. This is much more than trade. They just got behind Boeing. They wanted to surveil Boeing with this most recent deal. They're behind the hack at Marriott. I mean, these are serious issues.
Which, by the way, I woke up this morning to a fraud alert from American Express, and they suggested it's because of the Marriott hack. So somebody had stolen my credit card. So in terms of the impact on individual lives in this country, it's hitting home.
Right.
And nobody knows whether it was China exactly, but that credit card was out there, and somebody stole it. To buy themselves some lovely massages over Christmas. But to that point, but in terms of the messaging and the confrontational nature, I do think what the president has the right and the personality to communicate with the American people and the rest of the world the way that he does. I think you start to get into difficult territory where people in the administration try to be President Trump in terms of the way that they're speaking, in terms of talking about the market, talking about interest rates. I think that doesn't help in terms of what you're hearing out of the White House. And I've said that before.
Look, I'm not President Trump either. Maybe you should consider me. I know I'm not wearing white. It's after Labor Day. But maybe I'm like the little angel sitting on his shoulder. So maybe that's my role in all this.
This is new information this morning. What are your thoughts on this? China halting additional tariffs on U.S.-made cars. We're seeing little bits of progress, and I don't know if we should be believing it, buying into it or not, like yesterday with the Journal story, that they want to open up markets, that they want to get a handle on iPay.
Well, the Journal reported this earlier in the week, not yesterday, but 2 or 3 days ago, that China would lower the punitive tariffs. We should point out that the tariffs earlier this year started at 25%, a 25% import tariff on American manufactured automobiles. It went to 15%, and then when the trade fight with the U.S. heated up during the summer, it went to 40. So it looks like that they're just reducing it back to the 15% was the report that I read earlier. Yeah. But so this is just a cooling of tensions, if you will.
And in the same vein, yesterday we reported that China was going to buy all those soybeans, right?
Yes.
And then there was a $1.2 trillion in agricultural purchases overall. Well, if they're going to buy those soybeans, they're just going back to what they were buying before they started to pull in. So again, we are basically at the beginning once again. This is not new that they're buying these soybeans.
But this is what's so interesting to me is that there is progress. There are these little tea leaves, so to speak, that we're seeing that there's some things that are positive, and the markets aren't necessarily responding, and people are still nervous, saying this is #1 concern. I mean, the president talked tough to Canada. He talked tough to Mexico. Deals got made. He's talking tough to China, and deals are starting to happen. So I'm just curious, when is that going to take hold?
It's working. I think a lot of what's going on in the markets right now is pain. I know we want to talk about GM. GM stock not doing well. But look what stock is doing well. Tesla. What's going on there? I'm going to argue that it's market dynamics. There's a lot of pain out there in the markets. We're seeing some more of that this morning. When a stock like Tesla's going up and a stock like GM is not going up, it tells me that there's a lot of dysfunction. It means that shorts are being squeezed, longs are getting hurt. This is dirty stock market stuff.
Or that investors are smoking what Elon Musk has been smoking. I mean, that's possible.
No, it's possible.
I'm with you.
In terms of euphoria around that stock, euphoria is a drug. I mean, you know, that the market euphoria is like a drug.
I mean, has Tesla made any money? I mean, is that?
Yeah, they turned a profit in the most recent quarter, and they have been hitting their production numbers on the Model 3.
Because the valuation, I know, is all the way up there.
Well, let me say, if so, it's because Elon Musk has stopped with the distractions and he's focused.
Yeah.
What does that tell you?
Meanwhile, the president in that interview yesterday made it clear about how he feels and looks at General Motors. Watch this.
They've changed the whole model of General Motors. They're going to all electric. All electric's not going to work. I don't run a car company, but all electric is not going to work. It's wonderful to have it as a percentage of your cars, but going into this model that she's doing, I think, is a mistake. But to tell me a couple of weeks before Christmas that she's going to close in Ohio and Michigan, not acceptable to me. And she's either going to open fast or somebody else is going to go in, but General Motors is not going to be treated well.
Not going to be treated well. Now, they did get a huge bailout, Dagan, you know.
And they still owe the U.S. Treasury $11.2 billion. That's what the U.S. taxpayer lost on that deal. This is the problem with bailouts. It opens you up to criticism. But I'll point out to President Trump, if GM doesn't make these changes, and it's not just about electric vehicles, it's about stopping making small cars like the Impala that people aren't buying. It's focusing on the SUVs and pickup trucks, by the way, which is a subsidized vehicle in this country because we have 25% import tariffs on light trucks. So that's a subsidy for all the U.S. automakers. But just let them operate the business. You want them to be healthy. Otherwise, they're going to come asking for another bailout down the road.
That's right. They should be able to operate the business the way they want. And by the way, you say that they're not buying small cars. That's right. You know what else they're not buying? Electric cars. People want big SUVs. That is what is selling.
Right.
This has been the case for a while, even with oil where it is.
Absolutely. And I'll point out coming up what's going on in China with electric vehicles. It's an oversupply that they're trying to rectify as part of the change in policy in China.
All right, we will take a short break. When we come back, Starbucks right at your door. The coffee giant hoping to boost sales with a new delivery service. We've got those details right after this break. And then $1 billion view. Check this out, how Virgin Galactic's launch brings the U.S. one step closer to space tourism and beyond. Back in a moment.
Doesn't even start, it's Friday, I'm in love.
Welcome back. Markets are lower this morning. Take a look. The Dow Industrials right now down better than 200 points. The S&P's down 21 and the Nasdaq down 67 points. You know that Europe yesterday lowered its targets on economic growth with the Mario Draghi news conference. There's that. And we had weaker than expected economic data out of China overnight. Meanwhile, there's this. A police officer gunned down in Georgia. Cheryl Casoni with the details now in headlines. Cheryl.
Yeah, Maria, the police officer was shot and killed when a routine traffic stop turned violent. The suspect shot the officer in the head while he ran from his car. This happened in DeKalb County, Georgia. He also shot and wounded the officer's canine before being killed in a shootout with police himself. The fallen officer was with the department for less than 2 years. His brothers in blue in tears outside of the hospital. This is the 46th officer shot and killed in the line of duty this year. Well, let's head overseas. The French government reportedly now looking for a new CEO to replace Carlos Ghosn after he was indicted in Japan for underestimating his compensation. Renault's board is resisting pressure, though, to fire Ghosn. Ghosn, who was dismissed as chairman of Nissan Motors, Renault's partner, was arrested last month. He's charged with underreporting $43 million in income. Shares of Renault down 36% so far this year. A lot of layers to the story we're still following for you. Well, starting early next year, Starbucks is going to be offering delivery. About 2,000 Starbucks stores across the country are going to partner with Uber Eats to bring a cup of joe or your latte to your doorstep. The new plan outlined to investors yesterday here in New York, part of a broader plan to reach more customers. Taking a look at shares of Starbucks, trading lower in the pre-market, down more than 3%. We're watching a broader market sell-off right now. Well, Costco sales numbers surged in the last quarter, but it still fell short of expectations. Same-store sales grew 8.8%. Traffic rose only 5%, but sales totaled $33.3 billion. That fell about $3 billion below the expectations. So the stock is down about 3% overnight, up 22% so far the year, but the stock is under pressure this morning. And those are your headlines, Maria.
All right, Cheryl, thanks so much. That chart of Costco looks good. Starbucks delivery, good move.
I'm ready for it right now. Could it come right now?
Yeah, they need to deliver to the set.
Exactly. I'm waiting. I think it is a good move. I mean, everything is becoming more and more convenient. People are loving to get things delivered. Don't want to get out. Why not? See how it goes for them.
And Amazon at Whole Foods is kind of separating itself from Instacart, that company. They're going to do their own delivery. I've used Instacart. It's not great. So I think that if Whole Foods takes charge of its own delivery, that's probably better for
And they could, because Amazon acquired Whole Foods and they've got their own delivery service.
Right.
I will take a break. When we come back, software failure, the DOJ's deflection on why so many of Peter Strzok and Lisa Page's text messages went missing. Wait till you hear this excuse. Then cash crash, a money spill on a New Jersey highway, causing a nightmare during rush hour. Take a look at these pictures. We're going to tell you what happened when
President Obama, he had zero interest rates. Anybody can make money with zero interest rates. I'm almost at a normalized interest rate, and yet our economy is soaring. Our jobs are soaring. Our businesses are doing tremendously.
That was President Trump reiterating his stance on the Federal Reserve and interest rates to Fox News' Harris Faulkner yesterday. The central bank holding its last meeting of the year next week. We are expecting rates to go higher again at that meeting. Joining us right now is Florida Bankers Association President and CEO Alex Sanchez. Alex, good to see you.
Maria, thank you for having me.
Are you expecting the Fed to raise rates, and what's the impact from your standpoint on the smaller and regional banks?
I think that, Maria, I think the Fed is going to slow down now to wait and see to see how the economy is doing as we head into 2019. So I think in talking to my bankers, I think there will be a slowdown in that process.
Because you think the economy is slowing?
Yes, I think so. I think so.
So you think they're not going to announce one right now? You think they're going to slow down before or after this next one?
I think that's a difficult one. That's going to be a difficult one, Lee. But I think China, we obviously are waiting for a deal to be made with China. I think that's going to help confidence again. I think people are on pins and needles right now to see. And the president's doing the right thing. This is something that needed to be done years ago. But people are on pins and needles to waiting for that agreement to be done. And so I think the Fed is going to, see how the global economy is doing and how that impacts our country.
Alex, earlier this year, Wells Fargo over the summer, they during their earnings, they commented that there was a lot of competition amongst banks in commercial lending, and that was making spreads tighten up a little bit. Are you still seeing banks competing a lot for commercial loans? And if not, it sounds like there might be a slowdown. What can be done to really encourage more borrowing, frankly, to get the economy going.
I think, look, the banks are in the business of lending. They want to lend. If they don't lend, they don't eat. Right. So we want to lend, but to the right customer who has the right financials, who can repay, obviously. We certainly don't want to get back into an 08 situation. So it's a very competitive environment, even with the we're at a historical low in the number of banks in our country. And I think that's an issue that we should be all concerned about. We're down to 5,000 or so banks.
Down from like 9, right?
Right. And then down from 19 20 years ago. So I think we're not seeing the startup banks like we used to. We have 4 in Florida. So that's a positive, where investors are coming back in and investing in a community bank to grow it and to serve the communities that they're in. But Chairman McWilliams of the FDIC just came out last week and said she is very concerned that there's not enough new community banks being put up in the country. And so I think Congress needs to start looking at these issues along many issues.
You've got a new Congress now. In the new year, Congresswoman Maxine Waters is set to take over as chairman of the House Financial Services Committee in the new Congress. What do you think her agenda will be? What are your expectations?
Well, here? Maria, look, she's been a longtime member of Congress, and she's got 2 routes to go. She either use her subpoena powers to investigate the president and different industries, or she will look at ways to improve this economy, to keep this economy strong, for not only for her constituents but all Americans. And I think there's a lot to look at there if you're Chair Maxine Waters, like extending community reinvestment to credit unions who do not reinvest back in the communities like banks do. Look at a BSA AML reform on a bipartisan basis last week. Senators Cotton and Warner led an effort of bipartisan senators to look at reforming that system that hasn't been looked at since the early 1970s. Mm-hmm. Bankers are spending a lot of money being the police enforcement agency for our government, and I'd rather see our banks redeploy those assets, to your point, because back into the economy. For every 100,000.
But is that the reality of it? I mean, is that what she's going to do? I mean, what are your expectations in terms of what she's going to do?
I think hopefully if the Senate with a Democrat like Senator Warner and others who are looking at this issue, that will help the chair, and force her hand to look at issues to follow her Democratic colleagues. There's so much positive that we need to do to help the economy. For every $100,000 our banks spend on compliance costs, it's $1 million less we lend in the community. So she needs to look at issues like that, look at issues like low-income housing, and look at all the things our banks are doing to promote that. I know that's an important issue for her. Mm-hmm. She needs to look at the number of community banks that we have at the lowest point in our nation's history. She needs to look at ways to work with Chairman McWilliams at the FDIC to increase that number. So there's so much to do. Cannabis banking, Maria, that's a security issue. Right now, 33 states have legalized marijuana one way, shape, or form, and they cannot get banking services. They have former military veterans guarding warehouses with monies from the floor to the ceiling because they cannot get banking services. Wow. So we need to look at issues like that. There's a full agenda that Maxine Waters, and I hope she chooses the road to look at ways to increase the economic activity of our country.
We'll see about that. Alex, it's good to see you. Thanks so much.
Maria.
Alex Sanchez joining us there. Coming up later this morning, the CEO of Citizens Financial Group, Bruce Van Saun, is with us. Talk about lending and the overall economy with him. So stay with us for that. But first, Pay Up, the artist behind mega hit Blurred Lines, forcing to pay Marvin Gaye's family over copyright infringement. We will tell you how much. Plus, what a view Virgin Galactic taking in 14th. Your top stories right now, 6:33 a.m. on the East Coast. The Bears are up early this morning. Take a look. Markets are once again under selling pressure this morning. Down 217 points on the Dow Jones Industrial Average. Down 23 on the S&P, both down almost 1%. NASDAQ down better than 1% at 73 points lower on the NASDAQ. This on top of a mixed story yesterday. The Dow Industrials were up 70 points, but the S&P was down a fraction, and the NASDAQ gave up about 28 points on the session yesterday at the close. In Europe this morning, the indices are lower. FT100 down 56 points. The CAC 40 is down 50, better than 1%. 1%, and the DAX index down 112, also down 1%. Asian markets overnight down across the board, and the worst performer was Japan, as you can see. Breaking news this morning, China is set to halt punitive tariffs on U.S. autos and car parts beginning on January 1st. Plus, texting scandal. The Department of Justice report says a technical glitch caused texts between ex-FBI officials Peter Strzok and Lisa Page to go missing. Details coming up. Plus, a cash grab. Drivers on a New Jersey highway were scrambling to get as much as they can as an armored truck spilled money during rush hour on the road. Incredible pictures. Plus, heading to the final frontier, a look at the future of tourism as Virgin Galactic sets a new milestone in space travel. All those stories coming up this morning. But first, our top story right now, and that is markets in focus. Futures indicating a sell-off at the start of trading this morning over more uncertainty over a government shutdown and the U.S.-China trade. We, of course, have a Federal Reserve meeting on interest rates next week, and investors are taking their money out right now. Bank of America Merrill Lynch says equity funds saw $27.6 billion of outflows in the week that ended December 12th. According to Bank of America's data, that is the second largest weekly exit on record. Joining us right now is Optimal Capital Director of Strategy and Market Analyst Francis Newton-Stacy, along with Alpha Innovations President and CEO Larry Newhook. Good to see you both. Thanks so much for joining us.
Thanks for having me.
Your reaction to this volatility in the market, Francis?
Yeah, certainly the Fed is tightening, and so the overall aggregate money supply is reducing, and traders are no longer fulfilling all of the areas. They're rotating into things that they think that they're going to do well, and there are just areas that have sold off. So people.
What do you think?
What do I think? I think that if the Fed continues to tighten throughout the next year, I think we could be in a bear market because I think it's going to put pressure on the debt markets. We have record amounts of leverage everywhere in the system, specifically subprime auto, specifically student loans, and credit card debt, which is already starting to default. And you raise those interest rates, and they're quarter points, but over the large amount of money in the system after quantitative easing, it's a lot, and it puts pressure on the debt system. So we're going to see some credit problems. We have $9 trillion outstanding in corporate bonds.
Larry, you also a seller?
Not at this stage. I think I agree. We are seeing some rotation. We've seen money going back into EM, which has been the real laggard here. So I think this is a part of a normal rotation. We've got a lot of volatility that have investors nervous in that. So I think this is quite normal and quite expected.
So Larry, your firm's called Alpha Innovations, which has me asking, where is the alpha going to be in 2019? Where can investors go for the outperformance? You just mentioned emerging markets. Is that an area you're focused on, and what else?
Sure. If you look at where alpha is not these days, it's very hard to pick to generate alpha as a long short generalist in trading U.S. large caps. It's very, very difficult. You have a lot of the big players competing with each other, trying to mine a finite amount of alpha, and that's very difficult. EM, as you mentioned, certainly there's much more opportunities there. They're more efficient, and there's been a real pullback from those markets. So EM is certainly one that I would be looking at if I was looking at equity strategies for sure.
Well, what's a catalyst there for EM? What countries can lead? Is it China? Is it Brazil? Is it Mexico?
I think
what else?
I think more the Latin American countries versus China at this stage.
Francis, I want to ask you, though, what you're talking about, the Federal Reserve. The markets have already basically told the Fed, don't keep hiking interest rates every quarter next year. When the difference between the 2-year yield and the 10-year yield got down to the narrowest level in, 7 years, I think it got down to 11 basis points or 0.11 percentage points. The market and then the Fed basically places this story in the Wall Street Journal and says, wait, we're taking a wait. We're going to look at a wait and see approach next year. The market is already right in terms of stabilized if you look at what's gone on in treasuries in the last week. So is that really a worry at this point? Because the Fed it's pretty clear that after the rate hike next week, which is still expected. Some people put the odds at 50%. Right, exactly.
I think it's still expected, yes.
Yeah. But next year, it looks like that worry is certainly on the sidelines, if not wiped away.
So it remains to be seen. And I think with quantitative easing, we've never actually unloaded this much money off of the balance sheet. So we're a little bit in unprecedented times when it comes to normal tightening cycles. And the other thing is
which I've said on this show all year long, that you don't know what the impact will be because you're unwinding something that we've never seen before.
Totally.
50 billion a month.
And the most interesting thing about it is they're looking at unemployment and jobs, and those are lagging indicators. So what they're doing is reducing the money supply, which is a leading indicator, and then those are lagging indicators. So it takes a little while for things to filter through the system before you actually see the effects, which is why sometimes they get caught behind or off guard, as we've seen in the past.
So you've got 50% of your money in stocks and a 50% in alternatives. Talk to us about alternatives, because hedge funds, for one, according to hedge fund research, the number of new hedge funds launched is at its lowest level in 18 years. The number of funds being liquidated also declining. However, we know that hedge funds have not done well. Where are you in terms of alternatives?
So alternatives, we do direct private equity. We do hedge funds. We're very selective with the hedge funds. I mean, obviously, we have some exposure to AQR, Millennium, Renaissance, Paloma. Paloma is one of our favorites. It's been around for 35 years and has great performance. So there are winners and losers in hedge funds. I think the reason that the hedge fund industry is suffering in general is the fee compression. But I think hedge funds will make a comeback because I think active management during heightened volatility is going to favor passive. And if you saw the volatility trade in February, some of the quote-unquote ETFs that are supposed to be vol trades or inverse actually failed because the underwriters don't let you kind of have human intervention. So I think as volatility rises, hedge funds are going to come into favor.
And your equity part of the portfolio is what? Not ETFs?
There are a few ETFs, but mostly mutual funds that represent like all of the major sectors. You know, our U.S. equities, though, are only about 5% of our portfolio right now. So we're very underweight U.S. equities.
So what do you do on a day like today when the market's down so much? Are you a seller right now?
We have sold a lot already, and so we're waiting to get back in. Obviously, there's a lot of selling because of the taxes also at the end of the year. So we're looking for a little bit of a bounce in January. I see a little bit of a bottom building for a little bit of a potentially a bear market rally. But if we're in a bear market, it's really determined by the Fed.
Yeah. Larry, are there opportunities right now with valuations having come down the way they are? Where would you be putting your bets?
Right now, what hedge funds should be doing is actually, focusing on security selection and not taking market bets, especially at this point in the cycle. If you look at where a lot of hedge funds have done really poorly this year, it's because they've had a lot of beta in their portfolios. And if you strip away, the beta that's in these portfolios, what
does that mean?
It means the market exposure. So even though you think a hedge fund is hedged, most hedge funds are not. And that's they've been riding this tailwind of market exposure for the past several years. Now they've paid that back, or their investors have paid that back in October and in November. So I think that the managers that will do well in this upcoming market are the ones that are hedged, that aren't taking systematic risks in their portfolios and focusing on what they do best, which is security selection.
All right, we will leave it there. Francis, Larry, good to see you both.
Thank you.
Thank you so much. Francis Newton-Stacy, Larry Newhook. Coming up, the case of the missing texts. More excuses out of the Justice Department. Now they're blaming a glitch for losing texts from Peter Strzok and Lisa Page. We've got the details there. Then a real cash lane, literally, an early morning money spill on a New Jersey highway causing a nightmare for commuters. Everybody wanted to stop there.
Close your eyes, does it make you laugh? Do the memories take you back to 6 packs and a Chevy Cheyenne? Way back when I was Jack and you were dying.
Another big sell-off coming this morning at the open. Meanwhile, get this. The Justice Department is now blaming a software hiccup for the missing text messages sent between former anti-Trump officials Lisa Page and Peter Strzok. Cheryl Casoni with the details there. Cheryl.
Yeah, this new report says that a technical glitch prevented investigators from discovering text messages between former FBI officials Peter Strzok and Lisa Page. It says government phones given to them were wiped out once Strzok was fired from working on the Russia probe. Now, the special counsel claims there were no substantive text messages on the phone before it was reset. Separately, federal prosecutors in Manhattan are investigating whether President Trump's 2017 inaugural committee misspent some of the record $107 million it raised from donations. This was a big report on the Wall Street Journal that came out yesterday.
They're hard-fought victories.
Investigators are examining whether some of the committee's top donors
have invited the nations, our great nations, newly elected governors, and some really terrific people that going to do a wonderful job. We have some real stars in the room, and they became stars because of the way they handled themselves.
There were 12 governors-elect from both parties there. One of the new governors is Ron DeSantis, who overcame a heated race and an almost 2-week-long recount in Florida. He joins us right now, live from Tallahassee. Governor-elect, good morning to you.
Yesterday morning's commute.
Good morning, Steve. It's good to have you on the program. So, what were your concerns for the president?
Well, one, he's been great with
The spaceship climbed more than 50 miles above California's Mojave Desert, touching the edge of space. Virgin Galactic, now the first U.S. company to send humans to space without any support from a government space agency. Founder Richard Branson declared to the pilots when they landed, this is kind of cool, space is Virgin territory. I kind of like that. And Maria, I will say there's some chatter on Twitter about that New Jersey cash crash.
Yeah.
That folks are going to be in trouble if they don't return the money.
Wow.
And police have already put out an alert. If you have any information about the folks that were seen on the road, please contact us. I wonder what they're going to want to ask.
And there must be cameras around in terms of checking out their license plates.
Yeah, I mean, multiple accidents. Come on, folks in New Jersey. What were you thinking?
Yeah, thanks for reinforcing the national attitude toward people in Jersey. D-U-M-B, stupid. Get back in your car.
As we call it in New Jersey, Thursday.
All right, coming up, Excelsior, 2 Marvel movies hitting the silver screen.